You know, as a dividend growth investor who also cares about total return, sometimes taking a small risk works out. Sometimes it doesn't, but even that's okay, as long as our risk-reward ratio isn't out of whack, and as long as we're able to recognize when it might be time to bail. About 20 months ago, I picked a stock for the income builder portfolio that I thought offered decent reward potential for minimal risk, especially when it came to the company's ability to pay a pretty fat dividend. But it turned out to be a laggard, with poor total return and anemic dividend growth. So after losing a few bucks, but only a few bucks, it was time to move on. I sold that stock and used the proceeds to buy small pieces in 4 companies that already were part of the IBP. Moves I'll tell you about in a second. Hi everybody, I'm Mike Nadell here for the Dividends and Income channel. Before I get going, can you do us a favor to help us grow our channel? Pop the thumbs up at the bottom of the video, subscribe, and ring the bell so you get notifications of new videos as we publish them. Since we launched the Income Builder portfolio in January 2018, I've only sold a few stocks. That's par for the course for me, as I really don't do too much selling in my personal portfolio either. I don't like creating a lot of portfolio churn, and in the case of a dividend-based portfolio like the IBP, I don't like to have to worry about replacing income either. But sometimes it's necessary to sell, and that's what I did with IBM on September 17th. I selected IBM for the portfolio in February 2020 as kind of a turnaround play, but the company never really turned around, and I decided we'd waited long enough. Nobody likes to admit defeat by selling at a loss, but thankfully this wasn't a cataclysmic loss. We spent $942 when we bought it, and we just divested the position for $887. So the loss was only 6%. IBM had been projected to contribute about $43 to our income stream, and I had that in mind as I picked what I wanted to buy with the proceeds of the sale. The portfolio's income target is $5,000 after 7 years, and we're so far ahead of the game that I didn't feel a need to replace every penny. But I didn't want to give up too much either. I ended up choosing 3 companies we added to the portfolio over the summer: railroad, Union Pacific, truck engine maker Cummins, and investment bank Morgan Stanley. I also put a little of the money into one of our real estate investment trust positions, Realty Income. I'll get back to those 4 companies in a minute, and I'll discuss how the transactions affect the IBP's expected income stream. Let's talk about why I dumped the company known as Big Blue. I bought IBM right after they hired a new CEO because I thought maybe the move could get the company back on track. Kind of like what happened after Microsoft changed their CEO a few years ago. Analysts were also enthusiastic about IBM's move, and the stock price was bid up to a multi-year high on the news. But the market crashed about 2 weeks later due to COVID-19 fears, and IBM's momentum was gone. After the market bottomed out in March 2020, most major technology companies recovered their losses quickly and went on to establish new all-time highs. But not IBM, which never sniffed its pre-pandemic price again. That fits right in with IBM's long history of underperformance. The significant growth in earnings and sales that I and other investors hope to see has continued to elude IBM. Finally, in the second quarter of 2021, there were slight year-over-year improvements, but those were easy comps because they were based on the anemic showings from the pandemic's depths. IBM's earnings and revenues still sit beneath their levels of years earlier, and I'm still not sure I see considerable improvement ahead. I actually might have given IBM a little more time in the portfolio, but a deadline of sorts was approaching. Before the end of the year, IBM's going to spin off its managed infrastructure services into a separate company to be called Kyndryl. Theoretically, that'll let IBM concentrate on the cloud and other more profitable divisions. But I had no interest in the IBP owning Kyndryl, and I'm not sure getting rid of that operation will make IBM a better long-term investment. Focusing on cloud operations always sounds great, but IBM is so far behind rivals like Amazon Web Services and Microsoft's Azure that it's barely a bit player. Big Blue used to be the ultimate blue chipper and the classic wide moat business. But Morningstar's analysts think IBM's moat has quote-unquote deteriorated. For that and other reasons, it was time to move on. I used proceeds of the sale to add to 2 of the IBP's newest positions, 2 companies that should benefit nicely from any infrastructure legislation that ends up getting passed: Cummins and Union Pacific. Morgan Stanley, meanwhile, is performing spectacularly as a company, and they just increased their dividend by 100%. And then there's Realty Income. It's about to close on a merger with another major real estate trust, making a strong company even stronger. These are 4 high-quality companies that have a lot going for them, which is why I chose them for the IBP in the first place. Alright, now let's talk about valuation for a second. With these buys, we got Cummins and Union Pacific at much lower prices than we paid for them just a few weeks ago. Because those price declines were about an overall market pullback and not about the fundamentals of the companies, this is a good thing. I liked Union Pacific at $209 a share, so I love it at $202. I liked Cummins at $239, so I love it at $222. Everybody loves a sale. Analysts generally seem to agree that Cummins is undervalued, while Morgan Stanley, Realty Income, and Union Pacific are fairly valued. As for the stock we sold, Morningstar says IBM is overvalued, and only 3 of the 9 analysts surveyed by TipRanks call IBM a buy. Okay, now let's talk about the income piece of these transactions. After all, the main goal of the income builder portfolio is to build a reliable, growing dividend stream. The shares we bought of the 4 replacements are projected to bring about $27 dividend into the portfolio over the next year. IBM, remember, was expected to produce about $43 in income, so that means a reduction of around $16 for the portfolio. But the IBP's income stream is more than $3,100 dividend strong, and it's growing every single month. So the effect of these transactions on the income stream will be forgotten soon enough. And despite IBM's 5% yield, it really wasn't helping the portfolio's dividend growth anyway. IBM's last several raises have been pathetic, including its most recent one, for less than 1%. Realty Income's dividend growth also has slowed, but they call themselves the monthly dividend company for a reason. They'll do everything possible to maintain and grow their dividend. As for the other 3 companies, Cummins raised its dividend by 7.4% this year. Union Pacific increased its payout by 10.3%, and like I said earlier, Morgan Stanley delivered a delightful dividend double. It's impossible not to love a 100% raise. Cummins, Union Pacific, and Realty Income also have much higher dividend safety scores than IBM 65. Look, I made a bet on IBM. In my eyes, it was a reasonable bet at the time, and though I lost the bet, it wasn't a disaster. I mean, we only lost a few bucks, and it didn't really affect the overall strength of the portfolio or the income stream. But over the last few months, it became clearer and clearer that it was time to kick IBM to the curb. So that's what I've done. I'm confident that I've reallocated the money into companies that will help us reach our dividend goals, even as they improve the IBP's total return. With these moves, the Income Builder portfolio now has 44 companies. On our website, you can read about every stock we own. So if you'd like to learn more about the IBP, make sure you check out the link in the description. All right, that's it for today, everybody. I'll be back in a week or so with another video. Again, please give us a thumbs up, subscribe, and ring that notification bell so you don't miss out on any of our new content. Take it easy, everybody. Back at you soon.